Market is at 80,000, Nifty is at 25,000. This was just a number, Pratik. You can't say always in the long term everything will go up. Index is just a number. Withdraw immediately, buy the car. You want to buy a car in 25 or 26. An existing investor has to worry about what is that he has to do, what will happen to market. No.
Hello and welcome to our channel. With this video, we are going to start with a series of short videos where we will answer to a lot of questions that you as an investor would like to know. So do watch it till the end and don't forget to subscribe to our channel for more such videos. While we are recording this video, Sridhar, Sensex is almost at 80,000. Nifty is at around 25,000.
Correct.
And we have a lot of customers who have been investing through us for a long time.
Yeah, almost 15 years now.
We are into this business for last 15 years.
Correct.
And as an individual, you have been practicing into this for more than 20 years.
Correct.
Right. What is that, investor who have been investing for a long time and at these levels might feel that, okay, either the market will go up or there will be a correction. So what is that an investor should be thinking of?
Okay. Market is at 80,000, Nifty is at 25,000. This was just a number, Pratik, because we were together in 2007.
Yes.
We were at 21,000. In 1 year, it came to 9,000, even 7,000. Then it almost went back to 21,000, then 42. Then Corona came, it came back to 27.
Yes, and I remember that at 48,000, we all were worried that it is at all-time high.
Correct. So whenever market comes to a new high, people will have that apprehension. Index is just a number. Only thing is valuation. So just go back and see the numbers. In 2021, index was around 60 plus, Sensex. But price earning multiples were much higher than today.
Correct.
Right? So it was almost touching 27, 28 kind of that. Today we are at 80,000 index, but PE multiples are around 22, 23 kind of that. Definitely market is little expensive. Mid cap and small cap is little more expensive than Nifty or large cap.
Correct.
So I don't think an existing investor has to worry about what is that he has to do, what will happen to market. No. His worry or his responsibility is to, ideally, a distributor like us has to go to him and look, this is your portfolio, this is what is the numbers today, because majority of the portfolios what we handle are reasonably planned portfolios, right?
Yes.
So they have kept money for their kids' education, their retirement, their various goals. That corpus, whatever they need at their, say, whatever they need in 2026 has already been reached now. So you can educate them to pull out a portion and move it to a little less risky products. That is an ideal thing to do. Say you would have been kept 6 months contingency fund. You would have been given 1 year contingency fund when you are planning. Now that long-term corpus has literally swelled. It has become sizable.
Correct.
You can actually increase your contingency fund a little bit. I'm not telling you that withdraw immediately, buy the car. You want to buy a car in 25 or 26. Your corpus is ready. If you want to withdraw and buy a car, definitely no. Because it's an expenditure. It's better you postpone. You understood, right? Because you have to be very careful there. For an existing investor who is in capital market, whoever is investing through mutual funds, ideally for them to relook into their entire planning, see wherever they have to trim. Because you can't say always in the long term everything will go up. This kind of events you hardly get 2, 3, 4 times in your lifetime. We have seen similar events in 2007, the way I told you in the beginning. Somewhere we saw something similar to that around 2014, 15. 17 we saw.
Correct.
20 post-corona, for some time it was there. Then now, because a reasonably longer period, market is at a very good level. So you rebalance your portfolio to some extent wherever you are there with a little riskier asset class or wherever there is an exponential growth. Trim it a little bit, move it to little less risky product or no risk product. एक बार rejig करना बेहतर है.
Okay, but you mentioned about the valuation or the P multiples. Maybe all viewers are not very aware about
No,
it.
I will stop you there. I don't think a proper investor who is specialized in his domain. See, we have different set of customers, right? I don't think he has to go to nitty-gritties of everything.
Correct.
You understood, right? He should have a good advisor or a mutual fund distributor. Sit with him, educate yourself, upgrade yourself, hear him out, ask all your relevant questions. Make sure that your advisor or a distributor is syncing with your thought processes.
Okay.
Chemistry is built. I think you should rework.
But in today's world where everybody wants information, okay, so just for their information, can we say that valuation is something that for buying any product, there is a fair value which you pay, and
Correct.
there are some products where you pay a little bit of premium.
Correct.
Right? So from their context, a layman's context,
That is what is P
so we are
multiples.
paying a little bit premium of investing in today's market is what
Correct.
they can understand.
Correct. Today market is little expensive as far as only with terms of valuation is concerned. I don't think investors has to worry too much about index numbers.
Correct.
आज जो मैं खरीद रहा हूँ वो करेक्ट भाव में है क्या? That's what they should be more worried.
Correct.
So as it is not in that trajectory, it's worth to rebalance once. But if they are investing via SIP, definitely they should not stop the SIP. SIP should be continued, no argument. And rebalancing is different. Fresh investment is different.
Correct. I was coming to that point. Because of this euphoria or the massive returns we have seen in the last 1-2 years,
Correct.
right, a lot of investors are getting attracted.
Correct.
How should a person who is starting a portfolio now, or somebody who has money, right? There might be professions, there might be
Whatever is the source of
salaried
income.
people,
Yeah.
and they have some 5 lakhs, 10 lakhs to invest. And because they are seeing a huge return, particularly the mid cap and small cap,
Yeah.
everyone is saying that I want to put my money over there, right?
Yeah,
so
there is
how
the-
a new investor should look at this point of time and enter the market.
Correct. Say, whoever want to come to equity mutual funds, most important is asset allocation, financial planning, investment discipline, follow investment discipline, and you have to stick to your first basic plan.
Correct.
Okay. So you may be having some money to invest. First, sit with your advisor or a mutual fund distributor. Understand how to look at this entire plethora of investments.
So basically understand how much money they can invest, because people
Yeah,
see
that
the
is
first
the-
step. A lot of people come and say, what is the amount I should start with?
Correct.
So,
So-
by way of understand your cash flow, you mean
Yeah,
that
yeah, 100%.
know how much
They
they
have
can
to
invest.
have a proper planning in the place. First, say they may be investing from their salary income or a business income. The way you told, most important is the planning part. Whatever money they have to bifurcate into 3 different categories. Money, whatever they are investing, when they need that money back.
Correct.
Whether they need within 3 years, within 3, 4, 5 years, or pure long term. That is the asset allocation. Then for what purpose? Goal. Right? Then they have to add the required risk to that particular asset class or to that particular goal, so that any reason, if market volatility, whatever reason, their main intention of investment should not be spoiled.
Okay.
The planning is a must. Historical returns are very, very important for you to select an asset class, but that will not be the barometer for you to invest in capital market.
Correct.
So last 3 years your money doubled or tripled. That did not mean that it should happen next year or next 3 years. So those asset classes are meant definitely for long term. Long term means 7, 8, 9 years plus. This mid cap and small cap euphoria, whatever is happening, you just remember it is not something new. 2006-7, if you see mid cap and small cap rally, a lot of people came. Just go back and see the NAVs or indices between 2008 to 2014. Because from this, for you to make money by investing, I don't think you have to do a fresh mistake or fresh. You are not new to this world, right?
Yeah,
So
an investor might be new, but the fund's history is not
new. It already has a history of 20-25 years. They should see all these charts, plan their finances properly. Then I think they should start cutting the check towards investment. But most important is planning part. They can't mess up their historical returns. Should never be the barometer for you to select an asset class to make investments.
Correct. So, just to summarize what we spoke, so an existing investor should stay invested, continue their SIPs, and if their goals are somewhere close by, say next
Correct.
2 years, 3 years,
Correct.
then they should move a portion of the money to a safer asset, so that if there is a market correction, either they can re-enter or utilize that money
for their
goals,
particular goal.
right?
Correct.
And for the fresh investors,
Correct.
right? We suggest that they do their planning part thoroughly.
Correct.
And then invest as per their plan.
Correct.
When particularly investing through SIP route, when you are starting, at what level of market you are starting doesn't matter.
Correct.
Right? And if it is a one-time investment, because a lot of professionals like CA, doctor, lawyers, they may not have, or you may have somebody who's into business
professionals.
So
they may not be able to make any SIPs. They will be generally investing as and when they have surplus. But for them, planning is very, very important. Before cutting the check, understand the risk. That risk is not that you are losing money. Volatility is the very nature of the stock market. Even if you are buying at a very higher level today, when you stay invested over 10 years, that will average out. But definitely that is not a right advice to give. So you have to go a little slow. So better you sit with an advisor or a distributor, understand all these factors in detail.
And then not go by the historical returns only.
100%.
Okay.
No doubt.
If you have liked our video, please don't forget to subscribe to our channel and hit the bell icon. In case you want us to answer any of your questions, don't forget to mention it in the comments. Thank you.